Why are markets rising despite the tariffs? Number one, because of the set timeline on finalizing the tariffs rate, and number two, the ongoing negotiations. They aim at striking a balanced deal between the US and its trading partners. And the Liberation Day tariffs were announced on the 2nd of April, and market initially crashed in response. However, just 7 days later, on the 9th of April, the US postponed the higher tariffs increase for most countries by 90 days. And since then, the market has rebounded and even broke their all-time high set in December last year. Now that the dust is settling with the expiration of the timeline and the ongoing negotiations, the big question is, where will the market head next? My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. There are two dates to note. First is the 1st August and 13th of October 2025. Why 1st August? It is the 90 days timeline for most countries. It was originally set to expire on 7th July, but it has since been extended to 1st August. And why 13 October? It is the US and China agreement to a 90 days tariff truce starting on 15 July. The truce were set to expire on the 13th of October. And why are these dates important? Because they set the tone for the US inflation outlook and ultimately affecting the interest rate trend moving forward. And both of these sell-off that we're seeing here, they are big sell-off. If we still can recall, they are all related to inflation. And this was the CPI hit a half 9% in June 2022. The market declined due to inflation. And this was when the December CPI rose for the third time consecutive month to 2.9%. And the market peaked here in December 2024, and followed by the announcement of the Liberation Day tariffs. Fears of renewed inflation pressure caused the market to decline again due to inflation. Then, why are the market rising despite the tariffs? Because of the set timeline on finalizing the tariffs rate and the ongoing negotiations. But they are expiring soon. Therefore, after these timeline expire, the tariffs will be at least 10% or more. And US importer will have to pay at least 10% or more on tariffs after 1st August. The increase in cost will ultimately pass to the US end consumer. Based on the current 10% tariffs applied to most countries on 5th April, about 2 months later, on this report by the Business Insiders, let's take a look here. And this was reported on the 1st of June, titled Walmart Workers Are Sharing Photo of Price Hike of 38% or more. And let's take a look at what happened to the inflation. So therefore, when the tariffs were set in April, retail stores start to up their prices in June. And for June CPI that was reported only in the month of July, indicate inflation is already on the rise to 2.7%. And for this example, we can see that there's a time lag is about 3 months. The 10% tariff set in April to July publishing the June inflation data. With possibly higher tariffs set in August for most countries, we should expect to see a higher price for the end consumer on their daily goods. And with some lag in data as demonstrated, this inflation trend is likely to continue moving upwards. And so, how is this going to affect the stock market. And this is the upper band channel that I have projected since July 2024. And how do I get that? And it is still relevant today. And from this bottom trough, as we could see here, and I place it at the significant high of the year 2000, the dot-com boom, and we can see how reactive it was in July 2024. And it continues to be reactive in December, and this was the month of December. It reached a high, and the market kind of, there's some hairline here, it stayed under with the Liberation Day. And up to today, we can see that market seems to break above the upper band. But as the fundamental on the threat of rising inflation persists, I believe the market will continue to swing in this wide volatile range, something like this. Let me just do that. And we could see that since July last year, the volatility have increased. And I believe that, again, the fundamental of the threat of rising inflation is still there. I suspect that moving forward, it may take months or years, the market is going to get that volatile. And that's what I'm seeing here. And I observed that there's this phenomenon in the past weeks, similar to the pre-COVID meltdown. I'm not too sure if you can see this, but there is this smooth and low volatility market. And let's take a look at here. Yeah, that's as I draw this trend line, and we can see that it is generally pretty smooth. And later on, we'll go back to the pre-COVID-19 days. And I believe that on any break below, I'm watching it very closely now. On any break below, I suspect that the market will have a lot of headwind very quickly on the downside. And let's recap on the pre-COVID meltdown. And usually we don't see this kind of smooth volatility. Is every day is moving up, but on a very quiet pace. But we saw for Nasdaq behavior or Dow Jones or S&P, it is generally with quite a healthy swing, even in uneventful period. Now let's go back to the COVID days, and I'm seeing this. There's some similarity, and COVID days that will be in the year 2020, January. And let's go back here. And we can see that it is very similar. And of course, we know that the COVID days, there was this meltdown. And we can also see that there's a very smooth and low volatility market period here. And when the market start to hit this or trade below this uptrend line, this sell down, I would say it is pretty fast back then. If 2022 and the first quarter is this year sell-off was due to inflation, what do you think that the CPI trend is going to be with higher tariffs to come? And how will that affect the market? We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.